Hey guys, today I am coming at you with a little portfolio update. I have decided after my last video and some thinking, I know I featured XDTE and QDTE, and I just recently changed my position and have been slowly increasing my position in the Roundhill QDTE that I hold. Almost up to about $5,000 or 110 shares. And as you can see here, it's estimating 17.74 per year and a 35% yield. The total return on my position since inception right now is 2.23%, and the estimated IRR is 0.63. Isn't reflecting correctly because I just added this position about $2,500. And going in, you can see this is a dividend ETF that follows the go here. You can see it follows the NASDAQ 100 index, and now it's holding long call dated out to 3/21/2025, and pays out weekly. So on the I think I can go in here and show you. This pays out weekly, and been pretty. So you can see it shifts around a little bit, but the average kind of in the same range, so that's good to see. If I break this out even more, you can see when there's more volatility, obviously it's getting larger yield. But one of the reasons I like this is it's paying weekly, so you get to kind of average down differently. And you can see here how the buys, I have this dripping, so it just automatically market buys the day after it's the account. And this is a position that with XDTE that I want to kind of through reinvesting the dividends for right now. Expense ratio 0.95 on the higher end. I like how these been performing. If you look since max, you can see this fund launched at $46, and right now it's at about 44.69, which is just under 3% down. This was in March, so May, June, July, that's 4 months at 30%. So yeah, I said the total return on this is positive. If you go pull it up someplace else, you can probably see better. But yeah, it's holding its ground, and actually I think the NAV could have possible, like you can see there's times when it's bullish that it goes up. And I think as rate cuts come, this might have a chance to run. It already kind of it's up 3% in the past month. So I think this is a good opportunity along with the XCTE, but we might see even more. Like SPY has been, let's see, since inception of this is up, or pretty much it's up 1%. So it's not even, it's actually doing quite well. Yeah, I could see a similar thing, but with the yields like this, like I said in my last video when I covered both of these and what they did, I'll link that in the video so you guys can see related videos so you guys can see if you haven't. It's just nice to see a strategy that's yielding like a good high yielding percentage like this of 35%, and they're maintaining the NAV, like not going down. My second biggest position in X, which I like, and the total return is positive. You can see today it's down 30%. So if you were not reinvesting, you would be having a really tough time. You can see my total return is 4.2. So even though the yield is 73, my total return on this position is fairly positive and underperforming the market. I think that's temporary. Like I'm bullish on Tesla over the next few years, so willing to hold and grow this position. And I think that is the key to most of these ETFs, especially the high yield ones, is you really have to like be comfortable holding the underlying, just as if you were running a covered call strategy or selling puts on these assets. You gotta be willing to hold them, and the good times and the bad. You see a lot of talking about Coney, which is obviously doing great, and STY We'll pull that up also, which is doing great. Well, but even this, like it has its pullback, so you are exposed to both sides of this trade. The higher yield makes it much easier, but if you were to see Tesla go on a run like this, I would expect the yield to go up to the same percent. And strategy with these is different than with these this strategy. This one, with the QDTE, I just plan to dollar cost average and grow the position, whether it's up or down. And I think for me, that's my strategy. And I think once this grows big enough, so say if you can double this in a year or two, then it's going to be much easier. If the NAV stays stable, it's going to be much easier for you to use that for income generation, or to just, if you're looking to just get your return of capital, going to be faster because you're going to have own more shares, and you're going to have more history to see what this asset is doing. Strategy. But like everything else, my aim to be at a percent or less of my portfolio, these and XDTEs a little more. So I never want anything to be more than 2 to 3%, my overall portfolio, because if my income or ETFs that I'm holding are more than that, then that tells me I need to put more into my growth and my SPY, stuff like that. And you can see how I have this here. So I'm kind of underweighted on some of these at the moment. And I start getting income out of the stuff that I'm not, balance. Because when I think about this, I'm like, oh, I really want to get these assets because I like them. Like these new strategies that are coming out, and I want to add them there and have them part of my portfolio to start growing and see how they perform. But at the same time, I need to be like, okay, the hot, sexy stocks, you know what I mean, with the high dividend yield. But I also want to make sure I keep a good portion of my portfolio in the steady growth names that I know are gonna perform and hold my portfolio up. So if there is dark times in the market, know that like the majority of my portfolio is in solid assets. And I know some people aren't thinking that way, and they're just thinking highest yield possible. But coming at it with a little bit larger portfolio, I think, in a different perspective, and look at total return on these things, it's pretty clear to see who's winning here. Over these yield max ones, even, you know what I mean? As this BTO, maybe I should do a video about that, because it's clearly the winner out of everything in my portfolio. And if I went harder in that, I would have been happy. I think Coney is maybe number 2. So from the looks of it, hard to beat SPY. None of the YMAX ETF are beating SPY from what I can see, at least in my portfolio. But Beto is beating it. So I'm curious to see what we can do with DTE and XDTE with these compounding and adding to the position, because we'll see what happens with total return on that over time. But like always, I'll keep you guys updated. Thanks for watching, and we'll see you in the next video.